Welcome to the Broker Scale Committee. We are meeting today on training and how to grow your brokerage with training and that sort of thing. We have Adrian Fiola, Adriana Bates, Andy Price, and David Temko here. We got some great people to help us grow. So I guess we'll start with Adrian. Adrian, what are you doing for training for your LOs as you guys grow?
Yeah, so when we first started our brokerage, we used to do and invest in a lot of training, and we found that training by osmosis, like sitting next to people that are actually already in their broker space, was more successful to teach someone to be successful in the broker space than actually sending them off to some form of training or doing some online training, because the reality is the broker space is a little dynamic. And so we kept it really, really simple in our transition to just sitting next to someone that's doing broker and teach them that space very, very slowly. So.
Nice. That's similar to what we do. We sit with them, they'll sit with me, or if they're a process or LOA, they'll sit with the head of that department with us and train with them for 30 days. And that's what we do as well. I think it's the best way that we found for our team to do it. Adriana, what do you do?
So I will disagree with you boys. I don't have enough I guess maybe I don't have enough staff, but the staff that I do have, I feel as though the mentor type, sitting with them, asking all the preliminary questions takes away from a lot of the productivity that we have that's top of either our ops or our sales. They should be doing what they're good at, which is either selling or managing our ops. So what we've tried to do internally and found that it's very important to have like a very clear system of how people are progressing through training, what their role is, and giving them an overall view of how things work in the broker space is super important. Keeping them in that like checklist type of, okay, now that you've learned this, you're moving to this. Having all of that spelled out and super organized for the first 30 days has really, really been key for us in keeping people, making sure they're happy, and setting proper expectations for new employees.
Nice. Andy, how about you?
So for us, we put everybody free for 90 days. We do an LOA, so preferably a licensed one. That will help them kind of be their concierge, walk them through how we do things, our flow. If they have an LOA they're bringing in or something like that, or they want to be hands-on, we just provide that 90 days to get them on their feet. There's other people that, like, we try to hire people that already know how to do loans, right, from retail or whatever. So if they're people that are newer to the industry, on our side, we have LOs that are either looking to grow branches or things like that. So we'll put them with one of them that can give them that more hands-on training, because I don't have the time to do it. So that's always an option as well, to like join up with a team that can teach them basically like what you were saying. You just have like a mentor. And then when they're ready to branch out, they can. But that's how we handle it pretty much. And we do, monthly Zoom meetings with the LOs, go over, have investors on, talk about things. And then just processors, we do weekly meetings as well, just kind of go over what's new and things that we're seeing challenges with to try to always get better.
Nice. David, what do you guys do over at C2?
Yeah, it's basically like a 30-day program when a loan officer comes from wherever they come from, whether it's retail or another brokerage place. They come into C2, and we've identified the pain points pretty early on, what they're going to experience in the process of getting acclimated, with C2 or on the broker side. And we have a seasoned LO that came from retail that is guiding them, so it has a really clear understanding of what they're going to go through and how they're going to need help to get through that, to be the most successful once they get kind of into, because they're jumping 2 feet forward into the water, and as soon as they can feel that it's warm, they're going to find success quicker. So the goal is to get them ramped up as quickly as we can, so there isn't, and alleviate those pain points. So it's just kind of getting them guided to what loan origination system they're going to use, what are the kind of top 10 lenders they're going to go to initially, before they kind of open up the opportunity to kind of work with all the different lenders that we have. So it's kind of baby steps, like crawl, walk, and then run, and kind of not let them get to this place where it's like analysis paralysis on what to do, just kind of giving that guidance to kind of get in, slowly understand, and then grow from there.
Got it. I know you said analysis paralysis. That's a big thing right now with a lot of people coming over from retail. There are a lot of myths out there that I'm hearing with retail loan officers. I'm sure that's an issue with people when they're coming over. These loan officers may come over with maybe a false sense of like what it's going to be like to be a broker. What are some of those myths you guys have heard, and how have you overcome them?
Well, there's no support, that is alleviated with, we have a lot of loan officers that are very supportive. You know, it's a network of, in a community that people that they can tap into. Even though they may be independent and running their own shop from their, whether it's a home office or a satellite office, whatever it is, you know, whatever state they're in, they have the ability to tap into a network of very seasoned loan officers that, you know, are here to help all ships rise, you know, and they may have a certain scenario on a deal that they're not familiar with. And now they have, you know, they have all these lenders and they don't know where to go to, because it would have been a deal that they probably had to decline because they're at a retail shop that they're hammering round pegs into square holes all day. And now they have all these options, so they're not sure where to go. And so having that guidance, that network will definitely kind of, that support around them, you know, being at, you know, that's how we operate at C2, will definitely help them get more deals done and be more competitive. Which spills into kind of another, you know, myth, which is higher rates, which is completely untrue. You know, you're cutting, it's pure transparency on broker. Nothing's getting padded. You're getting the most competitive rates in the market, regardless of what lenders are in or out. You know, a lender is going to be in the market, they're going to be super competitive, and all of a sudden brokers are going to flood that box that they need to fill, and then they're out of the market. They price themselves out when another lender can step in, and that's the beauty of brokerage. So you're not, you know, stuck with one rate sheet that your sales manager upon sales manager upon sales manager is going, hey, you need to go out and sell this. You don't have that. You cut through that, and you can work with the most competitor in that market at any moment in time.
Nice. Andy, how about you? What myths are you seeing loan officers come over? Maybe some false ideas. How are you training around those? How are you debunking them?
Yeah, I mean, I think it's just like with consumers, it's education. So a lot of people, you know, they've been drinking the Kool-Aid a long time. They've been fed a lot of stuff. And so you have to basically tell them, like, yeah, we can do loans. Yeah, we can close on time. You don't need an underwriter in the office next door to you. Like, you still have access to underwriters. You know, if you don't like how a certain bank's handling a file, you can move it and work with somebody else. Like, it's not just a straight decline. I think a lot of times people don't realize too, like whenever they move to a new retail shop, they usually have them on a kind of a temporary rate sheet, like a new LO rate sheet, where the rates are lower for 60, 90, 120 days. And then they ramp it up to what they really are. And then you're stuck, right? Like the sign-on bonus is stuck. Like everything to me, when I think retail, I think handcuffs. I don't have as many products. I don't have as many options. I can't work with other banks, or I can't talk to 6 or 7 places about the same deal and find a yes when the others say no. So it's just an opportunity to say yes more. It's an opportunity to just flow freely, you know, in the market and find the best terms for your customer. With retail, you know, you're just stuck. I mean, that's really the way I see it. And I guess depending on where you go, there's lots of broker shops that have in-house processing and have LOAs and have people to help you. Like we have a scenario desk, like everybody's in that all day asking questions. So all the LOs are chiming in. You have account reps. They get paid when a loan closes too. So they're there to help you structure deals, help you fight with the underwriters, whatever. So to me, it's just, you know, no handcuffs. That's the way I see it. So I think a lot of times they don't realize that there's a lot more freedom on this side and a lot more opportunities and a lot more ways to grow your business.
Nice. Adriana, how about you?
I mean, Andy took everything. So do I need to say anything anymore? No, I'm just teasing it to you. But to go along with his point, I think there's, number one, I think the money that's falling out of the sky for retail, like they're getting that money from somewhere. So if you're getting a large sign-on bonus, if you're getting a super aggressive rate sheet that no one else in your market can offer, if you're getting all the support staff, but yet you're still making 175 bips, like money just doesn't fall out of trees. So that is going to come back from somewhere. So I think that's something that people will just learn in getting educated. And we were talking about that middle landing. Most loan officers that transition to retail, to another retail shop, thinking that grass is greener and things are going to be 100% different, realize that after their first 90, maybe 120 days, and then realize they should have made a different change. You know, they should have went somewhere else sooner. Additionally, I think the lack of control or not having underwriters in our pocket is completely off. What retail doesn't realize is that if lenders can't get our deals done, we won't send them business anymore. So their underwriters need to get our deals done to build that relationship with us. I think there's more of a relationship with your underwriting staff as a broker than you are in retail.
Yeah.
And that's my mic drop.
H1, how about you?
I'm going to go back on the debunking thing. Like, you're not limited in options. I think all of us have kind of touched on the idea that you can move loans to different places. I mean, we've done condo projects and we were able to shop different investors to then find someone that was willing to book condo deals for us for a non-warrantable condo until it met, whatever the requirement was to sell it for Fannie Freddie. If you're at a retail shop and they say no, like, you're pinned. There is no option. That realtor partner or whomever is going to move on to the next lender that's going to be willing to get their deal set up or going. And so I think, when I think about debunking and soft landings and intermediaries and temporary price sheets and all those things, I think it sometimes can be really hard for a transitionary person from retail to broker to understand that the rate sheet we're seeing and the value that we're offering is the same value that we're going to have today, 90 days from today, and a year from now, and it's not temporary. And so I think that's the biggest debunking thing that it's hard for folks to get a grip on, is that it is better, and it truly is better for a long time. It doesn't go away. So
I think
just the transparency, right? Like, I mean, when the rates get better, rates get worse, especially better. Like, we're not, like, there's no pullback on what's going to be offered. It's like, that's the new rate sheet with the lender. The LO gets the full benefit of it. There's none of that behind the scenes stuff where they're adjusting margins and, oh, we had a 50 BIP improvement, but we're going to pass on 20 of it, Right. So you never, like, on the retail, you never know what the heck they're making on the back end on you. And on this side, it's very transparent. I think it's a lot more fair. And I you don't always want to have that question, like, what are they doing behind the scenes on these rates? Like, are they as low as they can be? Are they, so I don't know. I've never liked that part either.
I think those are all great points. I mean, the top three things that we hear, and I guess you guys are hearing as well, is pricing, control, and can you get these deals done in a matter of time that's going to meet the closing date, right? And one thing that we do when the LO first comes over, when we're talking about them coming on board, or maybe they just came on board beforehand, they've seen our pricing engine. So we give them, like, hey, here's your own login, price these out. These are your rates. They're not going to change after you're done. Another thing that I do a lot when the loan officer comes in, maybe they just came on board, or I like to do all this before they're on board to squash those myths before they're here. I'll call an underwriter on a loan. I'll have them, answer the phone. I'll call, just a random file. I'll have them pick, and I'll call the underwriter. Sometimes they don't answer. Sometimes they do. But eventually, hey, your underwriter doesn't answer every time either. But I'll just show them, like, here's the contact. So at least we have the ability to reach out, because I think a lot of them think that we literally can't call. We literally can't reach out. And I just want them to see how easy it is. Hey, here's their direct line. Even if they don't answer, leave them a voicemail. They'll get back with you. So, we try and debunk those myths before they come on board. So that way, when they do come on board and we're training them, they already see, like, okay, this is how I get to that. They kind of just resonates twofold, I guess. With that being said, with them coming on board, you've debunked the myths, you've got them in training. Share some success stories. Adriana, we'll start with you. What are some success stories that you've had with a loan officer coming over, maybe from retail, and they join broker? How did they win?
So I think it's also, all of us have our other benefits of coming on board with our mentorship, with how we built our business. So I think plugging into Clear Mortgage, I've had two that have come over from retail just here in the last 60 days that, in switching over to broker, have had additional conversations with the realtor partners, because there's different products that we can offer, making sure that they understand that this is better for the client, and having those conversations with the realtor partners just gives them something else to bring back to the table as they're revamping these relationships and probably shifting more into a purchase market than they ever had. So in the last 60 days, I don't have exact data yet, but I would like to say that I know they've gone on more meetings. We'll see if that translates into more closings.
Awesome. David, how about you? I know you have a lot of people that come over from retail to broker with you guys. Share some success stories on some of those people.
Yeah, I would say there's a big push for realtor relationships, and folks that have been in retail that, they have relationships with realtors, and those realtors want to give them business. Well, all of a sudden they can't help that client that they're working with, that buyer that they're working with, when they come over to the broker channel and C2, and all of a sudden they have way more options, and they know how to identify those options and close faster for, based on whatever the nuances of that buyer's, finances are. That helps them deepen relationships with realtors, which is huge right now. And it's just getting acclimated in that system. So they come over, they get either teamed up with the right mentor, or at the right branch, or they get ramped up on their own independently, because they have their own relationships, and they know they have experience, and they just need to get kind of set up properly with C2. Then they find success really fast. But those are the success stories where they're deepening the relationships with the people that they have, because they can close better deals faster and provide more value. That's really where I've seen a lot of success recently.
Love it. Andy, how about you?
Yeah, I mean, it's kind of like hard to track. I've noticed a lot of guys that come over, in the last couple of years, like obviously volume was hard to begin with, but they were all aware like, hey, this has really helped me grow. I mean, they may have gone up 20% and they went up 100% in volume or whatever it is. And even newer guys like seeing the rates, seeing what they can offer. Again, just having a conversation that they haven't been able to have with realtors. I mean, that's huge. Like, yeah, the rates are lower. Yeah, we have more options. Yeah, we have, there's you can do it where there's no underwriting fees. I mean, there's just a lot of things that the SCR loan, like just whatever it is, there's a lot more there for them to offer and talk to their clients about and help save people money. And I think a big thing too is, talking to realtors, because the realtors, a lot of times if they start with the retail, whoever they're referring, and then the guys, the borrower shopping, and then they go somewhere else. Now they're working with some other lender we don't have a relationship with, and it means more work for the realtor. So if you're able to say, hey, we're going to be better than 90% of the people out there all the time. So, more of the deals will stay with me, more of them I can keep control of for you. And it just helps their business too, especially because we can qualify higher with lower rates and things like that, or help them save money in closing costs, or go lower on a FICO, or do a alternative lending option. So those are all big pluses. And the sooner that, we've seen the LOs embrace that and educate their realtors and their past customers, I mean, they see success.
Love it. Love it. Hey, Tron, how about you?
The big thing I've seen on the transitionary side is once they understand that there's multiple investors and they can shop different scenarios, I've seen the success of winning more deals. And I think that that's kind of been the bigger eye-opening thing that I've loved watching is like some of our LOs come in and they thought they needed an underwriter and a particular person to get a deal through, and they figured out that they can send it somewhere and, oh my God, it's like approved and moving through the process in a really short period of time. And I think what comes from that, or what I've loved in seeing the success, is the confidence that's been driven from the relief that actually deals get done and you can send them to different places and go work. And so that's been the huge thing that I've loved seeing is like when people understand that you can have confidence and understand that whatever investor you're sending stuff to is behind you and they're incentivized to get that deal closed, and seeing an LO like embrace like, holy crap, I'm actually making good money and they want to close my loan and it went fast. That's been kind of a sweet thing to see. So
awesome. I think we've covered some great stuff here, guys. Appreciate you all hopping on. I guess we'll see you next week, and thanks again.
Thank you.